Alright, welcome back, you scallywags. Tuesday, September 12th, and I am here to tell y'all that as far as swing trading goes, this market sucks so much wind. It's currently an environmental hazard. That's how bad it is. A trendless market is the worst nightmare of a swing trader. Doesn't mean you can't make money, it just means things get so much more, just so much freaking harder. The last time we had trend was back here through May, June, July. Ever since, guys, we're kind of stuck in the box. Stuck in the box. Until the box breaks, you're kind of channel trading. Looking for a move towards the top end, and then you're looking for a move towards the bottom end. So as far as the current status, down here on the scoreboard, the Bulls have got 3 points on the QQQ, and the Bears have got 1. So the Bulls have actually got a little bit of an edge in the QQQ. Then if we check the S&Ps, the Spiders, the Bulls do not have an edge. Bulls have 1 point and the Bears have 3. And then if we check the RSP, so the SPX is your weighted index, the RSP is your equal weighted index. Takes the 500 names from the S&Ps and gives each of those bad boys an equal weighting. The RSP here is looking pretty sus. Pretty sus indeed. The indicator actually says the RSP is the perfect short. Big 3 squeeze A+ setup. So it's interesting. The Bulls have got the edge in the QQQ. The Bears have a little bit of an edge in the S&Ps. And then your equal weighted index, it's a flat out short. So what that tells us is collectively, the market's not really in good shape. If you check out things like the industrials, healthcare, the financials, the utilities, etc., things aren't looking all that bullish. The QQQ, on the other hand, the QQQ does look a lot better, at least for now, than most of the market. So you got names like Meta, and Meta holds up pretty good here. Let me change these Keltner channels back. But yeah, Meta holds up pretty well. Squeezing on the 2-hour, the 4-hour, the daily, the 2-day, and the 3-day. So in a good market, you would look for those squeezes to fire to the upside. We have Amazon. Amazon just fired a daily squeeze. We're coiled up in a 2-day squeeze and a 3-day squeeze. And if you check out the squeeze here on the 3-day, she is a beauty. Got some buy signals. So Meta's in pretty good standing. Amazon's pretty solid. You have Google here. Right, Google's held up really well. Really, really well. And then even Microsoft fires that daily squeeze. We have squeezes on the 2-day, the 3-day, and the weekly. With that weekly squeeze actually being an A+ setup. So if September, October, November sees the QQQ taking out the high, there's a really good chance, guys, the weekly squeeze for Microsoft, the 3-day squeeze for Amazon, the squeezes in Meta, they should fire to the upside. If the QQQ is a bit more choppy, even worse if the QQQ is weak, they're probably not going to fire to the upside. Now, while Meta and Microsoft and Google and Amazon, even Tesla had a huge day yesterday, and overall the structure is still pretty good. So even though your Teslas, your Googles, your Microsofts, they hold up really well, the biggest of them all, the big man on campus, is always going to be Apple. None bigger than the Big Apple. And the Big Apple does not look good. This looks nothing like Amazon, Meta, or Tesla. Price is under the 50, under the 21 EMA. Momentum is below the 0 line. We have sell signals on the daily chart, the 4-hour, the 2-hour, 1-hour, 30-minute, and the 15. If they can't correct these issues here in Apple quickly, it's going to have a negative impact. Most likely, it's going to have a negative impact on the rest of your tech stocks. knowing that the QQQ is the one sector trying to hold up right now, if they can't fix the problems in Apple, and then you see your Amazons, your Googles, your Microsofts kind of throw in the towel, well, at that point, guys, we don't really have anything to keep the ship afloat as far as the overall market goes. Now, next week, if Apple's back above 180, that is a really good step in the right direction for the bulls. Until that changes, though, it's a big problem for tech, and it's a big problem for the market. Another problemo, continues to be the dollar. The almighty buckaroo. So long as the dollar is above the 21 EMA, cranking out that daily buy signal, it's an issue. Doesn't mean the market's going to fall apart. It just means in the face of a strong dollar, it is tough for the S&Ps and the Qs to actually trend higher and trade higher in any kind of sustainable fashion. So those two things alone, the strength in the dollar, the buy signals in the dollar, and the sell signals in Apple, it makes it kind of tough to think. It makes it kind of tough to think you want to wake up tomorrow, buy calls that expire in 4 weeks, and then go hit the beach. I'm not saying doing that with puts would work either, but until the dollar breaks down and until they clean up Apple, those are two negative catalysts that you gotta pay close attention to. So as far as swing trading, with all that being said, we haven't stopped swing trading. It's just you swing trade with a couple of adjustments. One of those adjustments being, if you catch a nice move, be a little bit quicker, guys, to take your profits. So you'll notice here in Pinterest, you had that daily squeeze back here in June. That squeeze fired. This thing ran for, 4, 5, 6 weeks. You had a good squeeze. You also had a really good market. Now, going back about a week ago, here comes Pinterest again in another daily squeeze. We bought it on Friday. We cashed out on Tuesday morning. We're not looking for that big continued push like you did back here because we're not in a good market. Pinterest might be a good setup. The S&Ps, the small caps, the Dow, the RSP, they're not giving you too much wind at your back. So you find your good setup, you jump in, you catch a decent push. I think you cash out when you move on. Another adjustment you want to make, think in terms of account management versus trade management. So last week I took off Walmart. We had some calls in Walmart. We took them off for break even. Had we held on, we would have made a bit more money. Last week, Walmart was one of the better setups, I think, in the market. And it's always nice to see the setups working as advertised. But we took off Walmart for break even to guarantee between Walmart and our two other trades that we finished last week with a nice profit. So there's markets where you're really going for the kill, and you're pushing your position sizing, you are pushing your frequency of the trades, you're pushing the size of the move you're looking for. And then there's a market where if you can crank out a good, 1.5 to 2.5% return per week, that's really, really good stuff. And I think right now we're in the market where if you can crank out that 2.5% per week, that, my friends, is some pretty good performance. Until, of course, we get a bit more of a trend to work with. We get a trend to work with, then I'm looking for 10, 20% per week. We going for it when we got that trend. So right now we got two trades open. We got a long and we got a short. You can call me Hector Hedge. For the short, we are short ADI. And I think this is a really, really good example of what you want your shorts to look like. It prints a daily squeeze. The bears have got full control on the scoreboard. Price is under the 50, under the 200, and under the 21. With sell signals printing on every single time frame except the weekly chart. So you've got the compression from the squeeze, And then pretty much, guys, from the ground up, momentum, structure, moving average crosses, everything currently aligned for that squeeze to break short. That's a great trade if the market will allow for it. If the market rallies next week and we're going back towards the top end of that range, though ADI looks like a really good short, it's probably not going to work. So we are short ADI. And then as far as one spot that I think you could look to get long, and that actually could work even if the S&Ps do pull back, that would be your energy and your oil stocks. So XLEs, ExxonMobil, Chevron, Oxy, Valero. One that we picked up here today is MRO. Marathon Oil. Really nice daily squeeze. We got the Big 3 Squeeze A+ setup label. Nice and green. Buy signals on the weekly, the daily, the 4-hour, the 30-minute, and the 15-minute. And I'm not looking for a trade that lasts for 2, 3, 4 weeks. Looking for a push towards 28 bucks and change, and then we're going to cash out. Now, if I can hit on MRO, and if I can hit on ADI, those two trades alone, they might be all I need to make that 2-3+% this week. There's a market for home runs, and then there's a market for base hits. We, my friends, are very much in a base hit market. Just remember, your base hits, over the course of 1 year, 2 years, 3, 4, 5 years, they really do add up. So we are long MRO, short ADI, and then we'll see what's up here throughout the rest of the week. You know, the good news is, you look at names like Amazon, Meta, Netflix, Microsoft, they've got a bunch of squeezes. To our benefit, we found the squeezes early. From here, it's a matter of just trying to figure out, most importantly, based on the indices, is there a better chance they fire long, or is there a better chance they fire short? And then we got to try to make sure we're on the right side of those moves. Alrighty, y'all? So as always, guys, thank you for watching. If you haven't already, do me a big favor. Hit that like and that subscribe button. And we do have a fresh link here in the description for those of y'all that want to check out the Big 3 Squeeze and the Mastery. Alrighty, so y'all enjoy your night. Take your dog for a few walks. Tell your significant other you love them. And I'll talk to y'all soon. Adios.